right, now welcome to the session at the Academy, Token Engineering Academy, Analyzing the Network States. We'll discuss datasets and analytics for token engineers. This is part of a project we have been running over the past weeks together with Token Terminal, Artemis, Token Unlocks, and Messari. And I'm glad we have great guests today. Before we start, some words about the Academy, because we have some new people in the room today. Token Engineering Academy is an organization community that provides education on Web3 business modeling, token design, mechanism design, game theory, systems engineering, governance, all to make token networks successful, robust, and transparent. And we are offering a course. You can find it at tokenengineering.net, Token Engineering Fundamentals, 5 modules, giving you a first overview, actually a pretty deep overview, like bachelor level on how to design, verify token systems, including algorithm design, verification, and Python simulations, etc. So feel free to check it out. It's free. You can enroll anytime. And with passing your exam, you can mint a proof of knowledge. And we have more than 3,000 students already enrolled. We are very happy and proud about the student space. And if you'd like to read more about content like this, I recommend to subscribe to our newsletter as well, TE Weekly Reads. We have published a report about this topic, data and analytics for token engineers, and we'll also publish some discounts for the tools we mentioned today. So make sure to subscribe, and we'll keep you posted on the latest developments on the token side. All right, our agenda today. First, we'll have an introduction round with the panelists. Then we'd talk a little bit about the token engineering perspective on data and the motivation to run this project and this discussion today. We'll discuss challenges in data availability and analysis with our guests. And of course, we'll have an outlook, what we'd like to see and what we can expect to see from the tools we'll discuss today. All right, that said, I'll stop sharing my slides and welcome Roderick, Tanawat, and Michael. Let's run an introduction round. Michael, maybe you start first, switch on your mic. Welcome in the session. Just say some words about your background, about Messari, and your role at Messari.
Yeah, hello. Thank you for having me. So I'm Mike. I'm a data engineer with Messari. I've been at the company for 2 years, and my role has been to really focus on what data we need to bring inside of our platform, how we want to analyze that data, how we want to look at that data, and most interestingly, kind of how we want to manifest that into products. So, we put out a lot of research content. So if you've read any of the Messari research, there's a pretty decent chance you've come across some data that I had my hands on. If you haven't read any of our research, I would encourage you to go check it out for sure. But yeah, I'm the data nerd essentially at Messari is probably the simplest way to look at it.
Glad to have you here. Thanks for the introduction, Michael. Tanawat, would you like to go next?
Thank you, Angela. Nice to meet you guys, everyone. I'm Tanawat. I'm the CEO and founder of Token Unlocks. My background was data scientist. I founded a company a year ago, and mission is to want to structure the data that it's quite hard for people to get clarity on, especially the token investing, token allocations that is hard work that people do when they do research on their own to find which token have allocations, when it's distributed, and how it's distributed. So we start quite small problems, but I think we build a data platform to help people digest data better on that sense. And I'm glad to be here and being a fan of token engineering work as well. So I hope to give you a context of what we are building and hopefully the data is useful for the community as well.
Awesome. It certainly is. I can already tell. Thanks, Tanavat. Roderick. I think you're muted.
I was using the shortcut key. Okay, we're back. Hi.
Okay.
Roderick McKinley here, everybody. I'm a tokenomics analyst and advisor. I have a prior background in corporate finance, where I worked as a specialist financial modeler, helping to finance renewable energy projects. And COVID brought me into blockchain. And I was initially working to help startups raise money through token sales, so very much focused on the Pi and fan charts, but eventually that broadened out into work concerning token utility design, token economy design, and that flung me far deep down the rabbit hole, and I became super interested in all these richer issues that I don't need to explain to all you guys as token engineers. In that process, I came to start a YouTube channel called Token Design, which you can tune into. I've been publishing reviews of all the great platforms that we're going to be discussing today, and analyzing it from the perspective of tokenomics analyst or tokenomics engineer. And in the meantime, I keep my work going with clients, collaborate with Token Engineering Academy every so often, and doing plenty of my own research to level up my game and make sure, we do the best work we can and build good practice in the space.
Awesome. Yeah. And our collaboration, Roderick and I, we started on a journey that brought us to actually reviewing different data products and ways to analyze token data. And yeah, that's why I'm glad you're here today. We share a little bit of this journey, and let me introduce myself. I'm founder of Token Engineering Academy, Angela. We started the Academy in 2022, launched this program last October, and since then we are developing programs for token engineers, not only education. We are publishing weekly reads covering the field of token engineering, tokenomics, token design, verification and optimization strategies, and more topics around Web3 business modeling. We are also running events, like we have been at EFCC last summer, running online events as well as on-site. We have been at DevConnect in Istanbul. And our goal is to grow this entirely new field of token engineering, which is an engineering discipline in its own right. It's certainly very relevant to make Web3 successful. And it's a new field, very cross-disciplinary, as I mentioned: computer science, game theory, mechanism design, AI, data, governance. That makes it challenging and very exciting. And the starting point for this project was actually that token economies are digital economies. I mean, everybody's talking about the shared ledger, the transparency we have about this new economies. Like, we have data on economies that we can measure and monitor on a granularity level like never beforehand. All transactions are visible, trackable. We can analyze, monitor, and also steer economies like never beforehand. So we can automate steering economies, also an entirely new field. And of course, data is relevant. And so the expectation is that we can measure economies to full extent. Nevertheless, it's in fact can be quite challenging to get the right data, to combine it in a way that it provides insights. And this is what we'll discuss in today's panel. And just to give you a picture of what kind of data we are looking at from a token engineering perspective, which might be slightly different from an investment perspective. First of all, we are usually taking two perspectives. So either we explore the landscape of tokens in a particular sector to compare their design, to compare their progress and draw conclusions. So this is the horizontal comparison. Or we dig into a particular token economy in order to draw conclusions, for example, for token redesign, for improvements, also for vulnerabilities, or for expanding token utility. And four main particular angles or topics of interest that we'll discuss today is number one, token supply. So how much tokens have been created so far? What's the maximum supply? What are the minting or mining mechanisms of a particular token? What's the current supply in circulation? What types of token holders exist that hold these tokens? And what's the distribution of these token holder types in our ecosystem? And this is relevant data that we need in order to design new token utility, to address the motivations of the stakeholders in the ecosystem, or also to design governance mechanisms where the token holders have a say. Secondly, private token sales prices and other fundraising data. How is this relevant to token engineers? Of course, to prepare a token sale, to be informed about VCs, early stage investors' choices in a particular sector, in a particular time, and strengthen our own hand in fundraising negotiations and to make them more efficient. Then a third big topic are market valuations. Here, typical questions that token engineers ask are, how did the value of a token develop over time? And how does this correlate with token utility events? Can be airdrops, fee launches, token unlocks. Or sometimes is the launch and the establishing and implemented token utility even uncorrelated. And we have to accept that utility change has only limited effects. And the last one that we'd like to discuss today as well is token vesting and distribution. So what's the token vesting scheme in a certain token ecosystem? And we'll get to challenging in finding this information today. How are tokens distributed? And how does this distribution affect the success of a token, the market valuation, and other aspects when it comes to demand? This is to find better mechanisms for token distribution. Also big topic, time-based vesting versus other strategies of vesting, of distributing tokens over time, with the goals to limit the negative effects on price and sync with the project's roadmap, for example, so that unlocks help the project grow instead of hurting it, which is often the case today. Now, overall, comparing or summarizing this particular token engineering perspective, we are looking for data that informs the design process, that informs the mechanism design, that informs the supply and demand design, rather than an investor perspective. That's why we need information about stakeholder groups, about the size of relevance and relevance of stakeholders, about their objectives or objective functions, because often we not only address users like human beings, we are dealing with bot and automated trading and transactions, and that's why we have to understand the strategies behind it. And how to address this overall with mechanism design that supports the supply and demand side. And this is what we call the network state. So analyzing the behavior, transactions, and valuation of tokens in a token ecosystem, the network state. And this is what makes the token engineering perspective special. And that's what we'd like to discuss today. And maybe now I'll hand over to Ulrich, and we share some more findings, what we found in terms of challenges today when it comes to this network state analysis.
Yeah, thanks, Angela. So it's been rather we've definitely gone on a journey in terms of getting hold of data. And what was so exciting about this project was really taking stock and seeing how far we've come and how much rapid progress is underway. I think the first observation was that the earliest data was heavily market focused, right? And as you've been discussing, our interests as token engineers are much broader than that, because it isn't just about what you can do in markets. If you're designing something to be useful in other ways, we're going to want to see how people are using it and what sort of things affect their behavior, and maybe how they respond to various initiatives or new features or utilities, as you were saying. So, but the market was initially, crypto's biggest use case is financial speculation. We can't, it remains that, and that's also the biggest economic incentive for data providers. But very gradually, we're starting to see the development of an interest in what people are calling fundamental investing, and the nature of blockchain revolutionizes data economics, right? Everything is encoded in a machine readable format. So we've started seeing these emergence of platforms, free platforms even, like DeFi Llama. But I think the difficulties are, first of all, most of the interest was somewhere else. Secondly, some of this broader information started to come on, but it would be fractured over lots of different places, right? So sometimes you would go here, sometimes you would go there. And then actually some of the other interesting information is not on chain. And it's so you have to go to a different place to find it. Stuff specifically around fundraising, which is where I spent a lot of my time initially. And it was so incredibly frustrating as well, because there would be information going around. You would get lots of decks, but then once the fundraiser is complete, everyone hides the information. And then you can't find it anywhere. And then you go on a website and someone's got like a screenshot of a slide deck. And then you find another screenshot of the same slide deck, but it's a picture of a different version of the same slide deck. And you don't know which one's actually the one that finally went through. So there's no way of tracking that where this thing came from, because the original source has disappeared. There are transparency issues, right? We keep on talking about circulating supply. Why is circulating supply on CoinGecko and CoinMarketCap never the same? Has anyone looked at a robust methodology of what circulating supply is? Do the unlocked tokens in the treasury count as circulating? And yet, it's preposterous. Speak to any Bitcoiner and they won't shut up about the importance of digital scarcity. And it seems that for every single other token in the space, it doesn't matter, because nobody actually knows what circulating supply is, and nobody has a robust methodology for it. What else? Yeah, and then there have been some great tools that are opening up that allow you to query on-chain data directly, but they're barriers and real frictions that come with that. You need to know SQL. You need to have a certain degree of understanding of how smart contracts work, because all the raw data is typically tabled up as sort of like smart contract events. So you need to understand that logic and then work that out to reconstruct that data into something that is economically meaningful. So that is still a lot of work. And these are all these challenges, right? So fractured data sources, irregularity, lack of transparency of methods, an overemphasis on markets. And what we're seeing is all of that is starting to become better. We're starting to see a lot more data being housed in one place. Messari has the best documentation. It's absolutely amazing. Nobody who cares about the instruction manual? I do. I'm maybe but it's so important to actually be able to go and see what someone did to get this data, and it's amazing that we're getting really robust documentation there. And slowly but surely richer stuff, and data is being prepared to make it more usable. Token unlocks are bringing some standardization to the vesting data set that makes it much more usable and consumable for analysis. So I think that may be my 5 minutes on this spiel. So Those are some of the difficulties, and they are gradually beginning to melt away, which is so exciting for us.
Yeah, absolutely. And I hope we can contribute to the development of data availability and analytics in this space. I think maybe now let's dig in. What are the challenges in reality? Mike, I would love to learn more. We talked briefly about the challenge in data availability when it comes to fundraising data. I mean, ideally, any token engineer would know any token sale price in all the rounds, being a private or a public sale, the number of tokens sold, etc., etc. What's the reality today? What are your efforts in make data about fundraising events available?
Yeah, it's a great question. So the fundraising data is really, really tricky because so much of it happens off chain, right? Like a lot of the fundraising data that you can go on Masari and find is gathered from honestly like grinding out, just staring at telegrams, staring at Discords, staring at Twitters, the relationships that we've built with different teams and investors across the space. And it's a very like labor intensive effort, and it's a very like network intensive effort. You kind of have to be plugged into the space. So I think at the absolute highest level, the most positive impact people can have is really push for a higher culture of transparency, right? I think a lot of traditional investors who come into the space are very comfortable making like private deals, and they're much less comfortable with like their deal making being out in the open. More crypto native funds, I think, have that higher comfort level where they're much more willing to share details about the round, and sometimes even some of the terms about the round, because you'll find it's not just like the amount raised, it's like the terms on that. What's their vesting schedule? What's the level of alignment between people on the cap table and the project? Those kind of details are particularly harder to come to. So I think as active participants in the crypto space, encouraging projects, founders, and investors to adopt the ethos of openness and transparency is important. And then from the on-chain side, there are a couple of tricks that you can use. While there aren't standards to it, right? Like the token vesting contracts might look different for one protocol. Another protocol might not even use vesting contracts. It might just be tokens sitting in a wallet somewhere or a multi-sig somewhere. There has been a slow adoption of using Gnosis for these things or vesting contracts. And if you do build some familiarity of kind of how these projects look, you can start to make some educated guesses about, I see tokens kind of moving around in this pattern. And I remember from this other token project that I looked into, they had a very similar pattern, and it lined up with their pitch deck or their raise in some sort of way. So it's really hard because it is in crypto, I think, one of the more off-chain things that happens. But if you're willing to stare at the numbers hard enough and stare at wallet distributions hard enough, you can start to see some similarities.
I just want to follow up there. So Masari is making a fundraising data set available. But like all the information that's on there is about equity fundraising. And sort of my question is, in one sense, these are all private transactions. There's no legal obligation to disclose any of this. But there seems to be such a strong asymmetry, a difference, a skew to why do investors seem to be more willing to disclose early equity investments and their implied value? Well, actually, they don't. I'm not sure. They don't disclose the stake, right? I'm just thinking back to that table now. It wouldn't show you how much of the company they got for their investments. It just says how much went in, right? And it doesn't say the. So I suppose in a way, a certain amount of information is still missing. Whereas with the I guess with a token sale, it's easier. It's a little easier to deduce what the implied valuation would be from that information. But anyway, sorry, I'm just thinking out loud. Do you have anything to say about why that difference, why we're seeing so much more readiness to share equity investing information versus token sale information.
Yeah, I think, a lot of these VCs, very candidly, are these investors have an interest in building their brand and like being public allocators of capital, because there's so many teams building in so many places in crypto that, publicity is your best friend for reaching these teams. So they're very happy to announce that they're in on the equity structure, that they've done this private sale of some sorts. They're much less interested and talking about the token details from an unfortunate but purely practical standpoint of they have to sell eventually, right? And you don't necessarily want to tell everybody you're going to be selling some percent of the supply over some number of years and honestly kind of short yourself, right? Like have the market price that in a negative way. So we live in like the little bit of the unfortunate reality where the information asymmetry benefits the investors. So the kind of compromise they make is publicly talking about dollar amounts to boost the brand, right? Not so much talking about token amounts and total percent shares or total valuations, because practically speaking, they need to be able to move their assets in a way that they view as they'll get the most return to their investors, practically speaking.
Got it. Tanawat, you work with these data as well. Did you ever try? At the moment, you guys don't report prices for private sales. Did you ever look at trying to do that as well? Was it something you looked at?
Great question, Rod. Like we got a lot of requests early on, but we decided not to go to the route. Thinking it's I think there are other players that are doing great jobs on that, like Messery and other people that try to structure a fundraising data in the nice format. I think the reason we haven't tapped into, like as Michael already said, that it's tricky to get into the private details of it. Sometimes you cannot have a complete overview of like what's the rounds, and even each round have each different size per VCs, right? It's hard to make sure that it's clean enough. So our approach is like, okay, we take a look into it, and the challenging effort is, as Michael said, is various, and you need to grind it. You need to find it elsewhere on the off-chain. So, and then we also stuck with unlocks, which is also another hard problem. So we deferred that, and I reckon what Michael already said, it's challenging. And also what you need to do is like follow the news, to reach out to the own source, or maybe ask if they are willing to share. And in this industry is still new. It's no single place to be that standards or regulated. Okay, let's share this so investors are going to be more confident to invest. But you already know crypto is freedom space. So yes, it's challenging, and we don't touch that because we know the hard work that where we're going to be to make sure the data is correct. Yeah.
And if I may jump in quickly, we have a question from the audience as well. Everyone, feel free to drop questions to the chat so that we know there are questions. And Tobias, if you like, switch on your mic.
Yeah, we're a bit beside the point by now, but to what Roderick was talking about, I wouldn't be surprised if, as I wrote, there's a bigger negative effect of a company buying 10% of a token supply as compared to 10% of the equity of the owner company. And I think that might be one of the reasons why token deals aren't as public as equity deals.
And why? Why is there a bigger negative effect? What are you?
Well, I think the direct effect on token holders, which is the larger portion of retail, is much more clear. If a VC sells 10% of equity, then okay, so be it. That might not affect the token price. Whereas if they sell 10% of the token supply over a period of 2 or 3 or 5 years, then if nothing else, there's a pretty hefty implied sell pressure that will most likely affect the perception of the token from the community side.
Yeah, this links very well. It's with what Mike was saying. that they want to exit, and the more information they reveal about the terms on which they acquired the token, the easier it is to sort of like make educated guesses and triangulate on what sort of price range will deliver them an acceptable return, making it harder for them to capitalize on that. So yeah, same but different. Tobias, I understand you're commenting on it from the community side rather than from the investor side, but very similar factors.
It might be interesting. It might be kind of interesting if you think about it, like these tokens become liquid or, buyable, sellable, transferable assets much sooner in their life cycle than traditional equities. And I think one of the things retail might not appreciate as much in this sense is they're kind of having the VC experience. You can imagine a traditional company going from Series B to C to D all the way up to their IPO. The investors in that Series B try to put some pretty exotic terms on their investments to protect themselves from dilution or from negative effects of their share of the company when the Series C happens. So what you might actually be finding now is this kind of honestly like knife fight for share of what the true equity value of these things are has traditionally been hidden behind, the multiple rounds leading up to an IPO. Whereas opposed to now, token investors are in on this much earlier. So, there is maybe a little bit of an edge case here where this is actually just the nature of the game when you're investing in these projects so early. So I think like it's almost like a mindset shift that retail might find themselves having to make as retail becomes an earlier participant in the cap table of these kinds of projects.
Super interesting. Michael, want to bring this back to you. This is, I think it's obvious by now that circulating supply is a personal bugbear of mine. Out of all the projects I reviewed, Messari seems to have done gone furthest in actually grappling with this issue and saying there's this is an ill-defined concept here, and actually if you start thinking about it, there's loads of ways you could slice it up. I'm just wondering if you're in on the history of how you decided to how that decision was taken, that we needed to flesh out this metric more, that the simple numbers on CoinGecko and CoinMarketCap weren't good enough, and whether there's any continuing interest in making these measures more robust.
Yeah, so I think at a company level, we have a high focus on bringing like a level of professionalism and like enterprise quality to the crypto space, and like offering hopefully as much of that as we can through like a much more affordable like pro and our free tier. We hope to give people a lot of access to things over time as well. But I think it's honestly just been a lot of community feedback, right? Like we knew from the very onset we wanted to get these things right, and we're lucky enough to be a visible enough company that our customers and non-customers, just community members, give us a lot of candid and critical feedback, right? They let us know, if something isn't good enough, and it comes from a lot of experience as well. We have a team literally dedicated to like taxonomy and just tagging events and things that happen properly. We want to like represent not only that something happened, but what was the nature of what's happening, so we can start to kind of group those things together into more well-defined metrics and stuff like that. So it's kind of an evolving process, but it really does boil down a lot to like the more transparent you can be about these things, the more granular you can be about these things, and why are we tagging something in a certain way, and then when we tag and label things in certain ways, it propagates through our systems in certain ways. And we really try to get it right at that like fundamental level.
That's awesome. Now, correct me if I got the wrong impression, but when I was surveying Messari, I found that there's an incredible amount of data, but the way the UI serves it to you really kind of has a very asset specific focus in the way that data is presented. And I think a lot of us in this community would get a lot of value from being able to access data that in a way that facilitates a more horizontal view and an ability to sort of compare things across the space more easily, and maybe see how an individual's projects or assets metrics deviate from the benchmark. Now, I know Masari is beginning to work on an API which is still in beta. Are there any other plans in progress to sort of create a more flexible sort of open data experience on the platform? Do you have any comments on that?
Yeah, so I can't speak to roadmaps or specific launches that we have coming, but I will say our philosophy is again to build with the community and build with customer feedback, right? So I think if you're looking at it from how do we develop these sorts of things, we want to continue growing this API, right? And then I think what will be most interesting to us is if you have all of the underlying pieces in this API and dedicated enthusiastic consumers of the product inform us how they're aggregating it to build that more network level or sector level views, right? We honestly want to be the positive recipient of that kind of learning, and we think we're pretty smart, but we're not the smartest people in the space, and we're not the only smart people in the space, right? The community's phenomenal. So I think just over time we'll move in those directions, but really it's going to be an iterative process so that we know we're building what our customers find is most valuable. So no specific items or plans or anything like that. I can't reveal any of that, but as always, we want to build products that our customers enjoy.
Thank you, Tanawat. So what are the things that really stood out to me about Token Unlock? So like I said, I've been I started off my career with this data set, with the allocations and the vesting, and it was absolutely critical to see what the offers were in the market to create a first offer that looked appealing to investors, to cut the number of back and forth to get to a set of terms that was acceptable. And at one point I tried to hire an intern and get all of this data, and it was so difficult to school them on this because the data was so irregular. And one of the things that I really enjoyed about Token Unlocks is not just that you've gone and collected this data, but that you've made this push to sort of say, okay, this data set is extremely irregular. How do we start, how do we normalize it in some sense so that we can start creating comparisons between them? I mean, how did you come up with is there any story to tell or about how you came to that insight or the view that it was important to do this for your data set?
Thanks for the great questions. We start off quite a simple one, vesting schedule, the first few projects that we can structure. And when you start with small projects, 1 or 2 projects, you find it easier to structure, right? For example, we find the vesting contracts and then we publish it into our product, and then it's become more iterative approach as well. As time go by, hey, these new projects can't fit in our same design, so we iterate to find a way to make it combine it better as we add more tokens. So we put into detail that if we add new tokens into our website, we make sure it blends smoothly with all the product and all the offerings, so that keep us iterate and come with standard to make it clearer for the investor and user in the space. For example, the standard allocations, we have it hard time looking to one application say that, okay, this is treasury wallets, but other people call foundation wallets, grants foundation wallets, treasury multi-sig without wording wallets. But look into detail, you find it's the same things, right? So those kind of philosophy to make it more comparative across the board help us keep iterating and improve the product with many versions. What you see today is kind of I think 10 iterations from what we start. And also, for example, a great lesson learned is some projects like crypto have a lot of innovations, and new projects sometimes doesn't fit with all our standards. So we need to take time, improve it, and add it more to our offerings. Like people have a genius way to vesting tokens, like not a linear or cliff, but we need to find a way to like present it into a more broader view so people can understand it. We kind of learn the space as time go by as well. But in short, it's like we learn from the feedback we got from the users. We add some tokens, work with the team, and make sure that we can align everyone on the same page on like what is a clear thing that people can understand easier on our product. Yeah.
I wonder,
and
kind of what.
Sure.
Sorry.
Go ahead,
If I
Angela.
may ask. Vesting and token unlock seems to be most obvious for automated detection. Obviously, it's not that easy. Can you maybe say some more words about the challenges here? And second, I would be keen, what's your value proposition? How do you convince teams to make it easier to for token holders, for token engineers to understand vesting schemes?
First question is share about how we come up with the scalable of the finding vesting data, right? How it's challenging to collect that, right? So very challenging. Like each project have their own methodologies, different blockchain. Each blockchain have their own each smart contract, and each projects have their own ways of vesting, like keeping to the wallet, keeping vesting contracts. So each of them is kind of different. But the key point is like even they have one information that we can find today, it doesn't mean that it will be there forever. Because for example, we find vesting schedule even before the token launch. After they launch, they can change decision and tokenomic can change through time as well. For example, Ethereum changed there to be ETH.2 and change the emission models, right? That's a bigger chance in tokenomics. What we can do is we understand those uncertainties and provide a reference point in time and track those changes along the way. We understand that we cannot get the perfect in each case because like some data is missing in a private chat. Some decision they made it in Telegram groups, for example. But gradually we learn how to like manage those uncertainty and provide user with the best available data today. And then we keep up with each project to improve them. So you can see that it's require a lot of manual process, fragmented disciplinary, like you need to know smart contract, you need to know data engineering, and we think that if a lot of people don't need to know this, but if you structure into the same format that people can use, it saves tons of time for everyone to learn everything, and that's our vision to keep building on this. I missed your second question, Angela. Can you share?
Second question was of how do you, I mean, it's part of your product's quality and margin, I guess, to work with the project to make it easier and more transparent to see, monitor, track their vesting schemes. Nevertheless, of course, this also takes efforts on the project side, and maybe there are even reasons to not be too transparent. What's your value proposition? So how do you convince projects to come up with better, more transparent, either documentation or why not standardized smart contracts for vesting?
It's a bit of, it depends on the projects, and I think some projects also, it didn't mean they want to be not, they didn't want to be not transparent. They want to be, but sometimes, as you know, like when crypto bull market come, they're busy building things, announcing some things that they just doesn't have time to tidy the things, right? For example, they don't update documentations, but the governance already updated. So with those propositions, or like making sure we kind of be the data partner to help them structure those areas. Team willing to help us more and notify, we change decisions on this. We want to make sure it the same message across the board. And it's become like inbound requests as well to work with us. Some projects, it depends. Like some budget didn't provide clear explanations. So we just put the things that, this is the things you already publicly announced for the team, for the investors, for retail. We make it structure and said, it's white paper based. we reach out to ask questions. So that's kind of nuance of the procedures that we need to tackle. So it depends on project, but I do see a lot of projects reach us out and want to improve more on this, and they want to know the standard as well, because people debate what should be circulating supply, whether the wallets that treasury is already circulated or not, or after circulated is fair to call it tradable or not. So those details we're trying to like create more structure to make sure more project is fit as well. So that's all the things that we are working on to clarify all those uncertainty between projects.
I want to pick you up on that because it ties back with what I was asking Michael about earlier about circulating supply, and that on your pro service you are offering you're offering users the ability to distinguish an unlock event from a claim event. So just because tokens are unlocked, it doesn't mean that they have been claimed. Are you able to share something about that? How the methodology used to label that difference?
It can go on each project side as well, because like some vesting is private vesting. For example, they vest in like third-party custodians, so it limits us to like how far we can label the claims data. We can provide only certain amount of claim data that we can have a strong set of leads that this should be a vesting wallet, and those help us like structure the claim data. And it often misunderstanding that after unlocks, the market gonna crash or people gonna sell. Some we see are long term than you think. They didn't move any tokens. So this give us user more clarity what is the way unlocks versus claim tokens. And also there's a case where we found that after they claim, they cannot sell as well. So you see how complex each project it is. This is the difficulty we can see across the board. Yeah.
Okay. We got another question in the chat, Angela.
Is there another one? I think I am seeing Tobias one. Do I miss anyone?
I sent a private message to Roderick.
I see.
Oh, it's a private one. Okay, sorry, misunderstood. Okay,
my bad.
Can you share it, or is it so private?
No, so it's regarding what's the story? So my question was basically whether. So I know it's fairly common. I'll just quote the what I sent. That projects work with market makers to manage those unlocks, and the thought was whether it would be possible to analyze, as we know then the unlocks, and it should be possible to analyze the market volume, let's say, or like whether there's a sudden influx of volume from certain wallets that those market makers use to mitigate some of that sell pressure upon unlocks. Would that be possible? Is that like a reasonable application of token unlocks?
I know there was a narrative at one point where market expectations were around unlocks were so pronounced when unlocks were offered on a monthly basis that the market makers would actually try and game that to the advantage, to their advantage. They would try and amplify a sell response that looks like it's being generated by the unlock event, but it's just them manipulating the market, and then scoop the tokens up. So it's been taken advantage of in a bad way. But I think what I saw happen was that everyone sort of shifted over to linear, because everyone sort of agreed that in the long run, people seem to it seemed to disperse sell pressure much more evenly, and that became the consensus best practice as far as but at a certain point before that, there was a narrative of some people trying to manipulate the cliffs. So yeah, it's nasty out there, man. It's with these thin liquidity markets, sadly, it's all too easy to manipulate things.
And there's a great work analyzing those unlocks with like size between like the market impact. I think Six Man Venture, right? A great one analyzing those unlocks. We do annual report last year as well, analyzing like the impacts on that, and we plan to do it in January as well for analyzing a big picture of what happened with each unlocks and what's the factors that impact those kind of size. But yes, I agree. There's like a lot of unlocks that doesn't mean sale pressure. People like manipulate the price and they like make it harder to. It's not like a clear path whether each project's gonna be like high liquid market or not. But it depends on each project how they approach of the distribution of the tokens. Yeah.
Right, and that said, I wonder, and this question goes to both of you, Mike and Tanawat, looking at some particular data challenges you have observed in the last 6 months. Maybe you can give an example, and also either share plans to improve it, or maybe achievements already, or where would you like the sector to be in, let's say, 2 to 3 years? Maybe Mike first.
Yeah, one of the most interesting things, and this probably comes from just recent challenges we have on our own end, is the scale of the data has become quite large. I remember when Arbitrum 1 launched and a project live peer migrated over there, we actually did like some initial token analysis because you could go through the transactions by hand on like Arbiscan, and you could actually like, it was a manageable number, right? Then Arbitrum launches Arbitrum Nitro, which multiplies block times and transactions and all that, which is very good for the users. It's like a net positive, but there's just a higher volume of data there, right? And you see a project like Solana come along, and the volume of data is just absolutely incredible. So there's some days where I feel like the power of compute available to people through free or paid services is outgrowing the blockchain. And then there's other days where I feel like the power of the blockchain and the growing state of these blockchains is outpacing the compute and storage available. So one of the things that's most interesting is, yes, the data is there on the blockchain in some sense, but do you even have like the prerequisite compute or infrastructure to run these things? So one of the things that, just on a personal note, having worked with so much of this data between our own infrastructure, the infrastructure of other partners we have, is really pushing that infrastructure hopefully faster than we can push the blockchains, and commoditizing as much of that as we possibly can, right? We want the community to benefit from all of this and have access to as much of the outputs of these machines as possible. So I often find myself thinking about scale a lot, which is one of the things that doesn't come up in these conversations as much. But like it's one thing to look at 10 transactions, it's another thing to look at 10 million, right?
100%. Yeah, good note.
Can I chip in with a quick follow-up to that? Do you see, as the space becomes more regulated, I have a background in traditional finance, and you have accounting standards. There's certain things about the way that data is reported. They have to be done in a certain way. And I'm wondering, would you ever see like a future where certain key pieces of data and information become regulated and have to be disclosed in a certain way, and we end up in a place where actions have to be implemented by certain standardized functions or smart contracts that are much more efficiently machine readable? Am I being fantastic with am I being realistic with that kind of expectation? Do you see something like that ever appearing, or will it just always be a case that the volume's going to be larger and larger, and there's always going to be this battle between compute and resource to compute?
I think there will always be the battle between like the amount of stuff that needs to be computed and the resources available to compute it. You know, it's funny, everyone always says crypto needs to scale, but having never talked to like a staff or a principal engineer at AWS, I bet if you went to them and said, have you scaled yet? They would say, no, we need more servers, we need more racks, we need more machines. You know, so the will we ever scale is, in my mind, a little bit of a fallacy. Like even Web 2 is always looking to grow their scale more. So that I have the impression will be a permanent battle. To the regulation side of your question, it's phenomenally hard, right? Like this is something Masari cares very deeply about. If you follow our founder on Twitter, 2-bit idiot, he's loud, he makes a strong presence, but it's because he and the whole company care very much about getting this right. You know, we want to find the regulations that inform people, right, and like bring light to the darkness, but we don't want to have the regulations that stop the innovation machine, right? We don't want regulations that like force people down a certain path, because I think to most of us, if not all of us, the beauty of crypto is the open experimentation. You know, I'll touch back on something I said earlier. There's just so many smart people trying so many clever things. You know, and Tenwat said it as well, right? We have to learn all the time. New stuff pops up all the time, and that's part of the fun. So it's hard. You know, if I had a solution, you could find me running for office or something like that. But it's really, really hard.
Okay, cool. Thanks for sharing, Mike. I jump in with a question from Saramba in the chat to be faster. I just read it out. I hope that's okay. Arguably, the blockchains were supposed to provide transparency and security, and thus lead to better market efficiency than traditional financial markets. But as has been already covered in the discussion, the current state is of market being far from efficient due to a lot of off-chain data, lack of standards, due to amount of the on-chain data being too large for most stakeholders to be able to process. Now, their question to all panelists: do you think that improving market efficiency is necessary for wider adoption of DeFi overall?
Yeah, I want to jump in on this because like this question resonated me. Why me and my team want to build this company, because like we feel that blockchain is transparency layers, right? But the operational off-chain, like the decision makings on top of that is like rarely put an eye on, because those blockchain layers get used as a marker word for like trustless and transparency protocol. But the governance and operation on top of blockchains, there's some uncertainty to it. People can make a centralized decisions if they are not being careful. And yes, I think if we can clarify those uncertainty for the other retail markets on external traditional market, I think they'll be more confident to put more investment into these sectors. There are uncertainty on like regulations, unseen supplies, uncertainty whether people can decide not to give away airdrop, for example. And investors kind of scared of that. I think, yes, if we bring up more transparency on those off-chain layers, it will become more confident for other people to invest more asset that they didn't even know who control the supply, who can release it to the market at a single time. So yes, for my side, it's exactly what Tokenology's team want to build and serve this purpose. Yeah.
All right. Oops. Just checking messages. We have more comments. I think, Sebastian, you have 3 questions. Maybe food for thought for everyone. What would you identify as the top 3 challenges we face as token engineers? What are the 3 main benefits we provide or future promise to society with our presence in the market? I guess this goes to token engineers as well. And what are the 3 key skills that as token engineers must always keep in mind and continuously refine? I think this very much resonates with my question, or the summary anyways, that I'd ask Roderick for. What should be the token engineers' contribution, or what we would love to see, I mean, based on what we've seen in this recent project, in many token engineering projects.
So am I taking that up?
Yeah.
Yeah. I think well, first of all, I think we have to be a little bit humble here. We're not the largest market segment for any of the data platforms. So we're delighted that they've taken time for us. But I think it's still going to be very much the investors leading the way. But the investors are beginning to take more of a fundamental interest in fundamental activity, and that very much aligns with us. So we would, and as I did this review, I was sort of becoming aware of the leadership and the sort of proactive thinking that these data providers are offering in terms of new ways to present data and to offer data measurement. So it might be a bit nerdy, but if it would be interesting if you guys would showcase sort of like new measurement approaches or new methodologies, and that would bring us into conversation about how we go about designing proper KPIs for these systems. Being able to relate data is not just within a single metric across projects, but being able to relate it cross-dimensionally across data sets. Especially when we begin to get to a point where we can relate off-chain and on-chain data and different dimensions between them. That's once we get a facility that allows us to do that. Really, I'm sure there are going to be lots of really interesting insights that we can derive from that. So those are the sort of things I would love to see, and I know they're coming, because this is a very competitive space, right? If you've got people who can essentially create views on data for free, the only way you can compete and stay ahead is by creating value add. So there's here's, you're nodding, Mike, and I'm very excited to see all the creativity that will generate.
Yeah, and I'd like to close. I mean, I'm yes, humble is good, but I must say, today so far, all the reasoning in tokenomics was very much focused on supply and how can we design supply. I think ultimately demand is equally relevant and maybe even more challenging. That's why data and insights is so much needed to make token ecosystems successful. And I guess we are just at the beginning. I'd like to encourage token engineers to be confident about their contribution to the growth of the space, to the growth of token value and of token utility. And that's why I do see a very important role of token engineering here. That said, thank you so much, Roderick, Tanawat, and Michael, for the super interesting conversation. I hope we can continue in 2024. Thanks everyone for joining this conversation today. Tobias promised to share a slide. I'm excited to see what it is. Join our Discord to continue the conversation, and subscribe to our TE Weekly Reads, and have a great time, and see you in 2024, everyone.
Should I share it now or in the Discord?
In the Discord. Thanks, Tobias.
Okay. No worries.
See you all soon. Thank you.